are small business owners adverse to advisors? Are they adverse to advisors? Whenever you and I began thinking about that off the air, I started thinking, I know a lot of business owners that will run out to their attorney, their CPA. Mm-hmm. But when it comes to somebody, maybe a business coach or a tax planner or a financial advisor or a wealth planner or someone like me who I consider ourselves comprehensive planners, I don't see a lot of business owners knocking down our door. So we did a little research. We found a study by the American College, which is a nonprofit financial services institution. In fact, they actually teach the undergraduate level classes for the Certified Financial Planner Board. It's one of many that do that. And here's some statistics that I thought were amazing that were provided by the American College. Here we go. 6 out of 10 small business owners have not consulted with an advisor. 3 out of 10 small business owners have not estimated how much capital they will need to comfortably retire. Fewer than 1/3 of small business owners actually have a formal plan for how to manage their income and expenses. And fewer than 1/4 have a formal plan for transitioning their business to new management or ownership. We deal with this in the Exit Planning Institute. As you may be aware, I'm a proctor, an educator, a faculty member of the Exit Planning Institute. And one of the studies that I remember clearly is only about 25% of 25% of business owners actually have a written plan. And we're not talking about just financial. We're talking about a written plan for their business, an exit plan, et cetera. So, buddy, I'm going to throw it in your world now, and I'm going to ask you a question. What is a financial advisor in your terms, or maybe what do business owners view financial advisors as?
I think the way you phrased it the second time is the more apt way to think it through. I think a lot of the reason for being averse to working with financial advisors, because who knows what that term means, Justin, right? It means almost anything, and therefore it means pretty much nothing.
What do you mean?
So for example, let's say I'm a physician, right? We meet somewhere on a golf course. Hey, I'm Brandon. Hey, you're Justin. You ask me the question, Brandon, what do you do? Oh, I'm a physician. What's your next question?
What type?
Oh, interesting. Let's say I'm an attorney. Same scenario. Introduce myself, Brandon Jordan. I'm an attorney.
What's your next? Yeah. What type of attorney?
Nobody knows to ask us that, Justin, right? Huh. We just get grouped into this one big bucket. And I would argue that our profession is not as broad as medicine, but I think I could make a logical argument that it is as broad as the law.
Yeah, I would agree with you. In my career, Brandon, I've seen the term financial advisors on bankers' business cards. I've seen them on pet insurance salespeople's business card for pet insurance. I've seen financial advisor on credit counseling companies. I've seen financial advisors on talking figureheads on the radio. I've seen financial advisors for insurance salesmen, for stockbrokers, for ESOP providers, is that what you're referring to?
Exactly what I'm referring to. You don't know what you're going to get.
So whenever we look at this, I guess one of the first questions then is maybe business owners are concerned, maybe the term I would use, concerned that they think they're going to be sold something.
Wait, wouldn't you be?
Absolutely.
Yeah, I would be. So if I don't know what I'm going to get, I'd much prefer not to even engage in the conversation. I mean, I've gotten this far on my own. What is some sales guy going to help me get?
Not a day goes by, dude. And as the CEO of the company Heritage Investors, there's not a day that goes by that my inbox does not have less than 70 solicitations from various people wanting to get my ear to sell me something. And I grow kind of callous, dude. I really do. I get kind of frustrated at people, and then the best one, a classic, LinkedIn. I get an invite from somebody who says they're XYZ, and I accept it, and then I got a message back saying, hey, you got 15 minutes? No, I don't. I'm busy. You got 15 minutes so I can sell you something? Heck no, I don't have that time. How many business owners have you spoken to that actually experience that same exact mantra?
I think it'd be easier to say how many I have spoken to that have not experienced that.
So one of the conversations that I often have, and I've said it countless times on the podcast, and if you go back and listen to any podcast for any length of time, you're going to hear me say this. I hate Wall Street. Hate it with a passion. I like to watch the movies because I see the crookedness of Wall Street on the movies like Wall Street with, with Michael Douglas and some of the other ones. I mean, greed is good. And I was like, man, greed is not good. Greed can be harmful. I understand what ambition maybe is good, but greed can be harmful. So I like watching the movies, and I like them when they get burned because they're crooks. Not saying everybody on Wall Street's a crook. Please hear me. But on that movie, you could see what they were doing. I had this feeling, personal feeling. I want to see if you agree with me.
Okay.
That Wall Street is not the savior for me, a small business owner. That Wall Street is not the solution for me to build wealth as a small business owner. I believe personally, I've spoken about this many times. In fact, in our next book, we're writing about this. I believe that our business, number one, is the tool, is the process to which we're going to grow wealth. I believe that if a business is properly positioned, that we can grow our net worth by 20, 30, 40% a year, depending on the market, depending on your particular segment. But Wall Street, if I were to quote Dave Ramsey, says a 12% return, or Clark Howard says a 10% return, or some of these other ones say, like Susie Orman says, a 9% return. I believe that Wall Street is slow money, that they have this attitude, these salespeople have this attitude that, hey, you dumb business guy, me smart financial guy, you bring me your money, me solve your problems. And I got to tell you, I got pissed as a 17-year-old when I'm making more money, me and my brother making more money gross than my mom and dad, go to meet this financial guy who's sitting in his little ivory tower, dressed up in a three-piece suit, which, by the way, I don't wear suits because of this, dressed up in his three-piece suit with all the really nice woodwork around the top of the, I'm on a soapbox. I know, friends, just let me vent for a second. Woodwork all around the top of his office. I walk in there as a successful 17-year-old making hundreds of thousands of dollars, and this cat behind his desk leans back and he says, when you make a little bit more money, come back and I'll show you how to get rich. Dude, it ticked me off, and I've never forgotten that. Is that why, perhaps?
I think so. I think so. I think there's just a core difference in philosophy between Wall Street and firms like ours, right? So Wall Street believes that they are the ones who create the wealth, right? Give me your money. My job is to separate you from your wealth. Implicit in that argument is that I can do better with your money than you can.
Yeah.
And now maybe there's some folks where there's some truth to that, but I think like our core fundamental philosophy is that that's not true for the business owner, right? So as a business owner, just let me ask you a question. So, and as an investor, what would you consider to be a good year from a return standpoint with investable assets?
A good year?
A good year. An average good year. I know it's a tough one.
Yeah, I mean, as you're talking to me, not as the CFP, not as the financial advisor, but me as a business owner. So that's how I'm answering this question. Yep. If I, as a business owner, if I saw 12 to 20% return on my investments, my Roth IRAs, my 401ks, things of that nature, I would think that'd be a good year.
What about your business?
Oh, heck. I can do 100%, 200% return.
That's what I'm trying to get at here. Yeah. So in the traditional investment world, a good year is a fraction.
Correct.
Okay. In the owning a business world, a good year is a multiple. Okay. Wow. So that's how I look at this. Now, that doesn't mean that the fraction side of the equation, having wealth outside of the business, isn't sound planning. It doesn't mean that at all. But we just come at it from a different approach, where we believe that the business owner is the one who creates the wealth. Our role as the certified financial planner is to position them to be the best at what they do.
The way I look at Wall Street, for me, and I'm talking as the business owner here, not as the investment advisor, investment advisor representative of the registered investment advisor, which Heritage Investors is a registered investment advisor, and we only conduct business in the states in which we're licensed. And just because we're registered, friend, doesn't mean we received an endorsement or any of that other nonsense. Those are all the disclaimers that we have to give whenever I say stuff like that. But whenever I'm talking in this next illustration, I'm talking about me as the business owner, okay? Mm-hmm. As a business owner, Brandon, the way I look at Wall Street is it allows me to reduce my top line highest tax bracket money. Mm-hmm. So let's say I'm in a 30% tax bracket on the highest dollar figure. I can utilize through tax planning, use some Wall Street resources to get a 30% instant ROI.
Yep.
And have an additional, I call it safe money, 8, 9, 10%, whatever the number ends up being, returned systematically over my life. So I call it my slow money. So whenever I look at retirement assets, I say I get an instant kicker for my tax plan, but then I'm getting slow money return, And more importantly, it's outside my business. Knowing statistically that only about 4% of businesses sell without having concessions on them, and only about 12% of businesses actually transact an actual sale. I realize that I have to have some money set back for what if scenarios. I call it my rainy day fund, like a squirrel hides nuts in the trees. I like to watch them run around the woods. I consider that my slow money. But I got to tell you, dude, I get ticked beyond measure. In fact, I preached this at the Exit Planning Institute recently on a lecture I did. I had a lot of Wall Street people came to me and said, "You've lost your mind." I get ticked whenever I hear Wall Street come to me as a business owner and say, "Oh, give me your wealth, me make you successful." I'm like, screw you. I know how to grow a business. Get out of my world. Am I thinking wrong as a business owner?
No, I think you're thinking entirely logical. From a, one of the things I've often said over the years is when I'm working with a client, I want us comfortable with a 0% rate of return to start as a business owner.
Talk to me about that. That's unusual.
What I mean by that is that the presence of slow money or liquid money on our balance sheet permits us to move through our life and our business differently.
What's interesting is we had a meeting with one of our clients this week, and they're a tax advisor. And while we were talking with them, this individual, because of some tax planning that the tax advisor and our firm did together with this particular individual, using some Wall Street products, by the way, okay, it made sense. They ended up getting almost a $200,000 refund on their tax bill. Well, back last year, we had some cash. I said, why don't we hold some cash and hold it in a cash position? I didn't take the position of, oh, you got extra cash, let me throw it in the stock market. I said, no, we need to hold some cash right now. I didn't know we were going to deal with what we're dealing with at this point, obviously. We need to hold some cash right now. There's some opportunities. If you look at the economic cycle coming up, I'd rather you have some cash, be able to make some decisions whenever the market does, or economic turns down, et cetera. And the CPA at the time said, Justin, that's very unusual. Why would you say that to them? And I was trying to explain the bigger picture. I'm trying to, like you've heard me say many times, I want to teach people how they can double their net worth every 3 to 5 years. It's possible, especially with only a business owner can do it, though. You can't do it in the stock market, okay? But business owners can do that. And here we are now in the midst of COVID, and the market falls, 30-something%, 40% at one given fell swoop. And he's sitting on all this, as you term, dry powder. And our turn changed. Both me and the CPA said, okay, at this particular point, real estate's not a purchase. Business is not a purchase at this point. We can't go out and buy businesses quite yet. But man, the markets are way low. It's just another tool. And the CPA said, okay, Justin, now do you think we can put some money in the market? Absolutely. And he's already ridden the wave back up. Greater return. Now, that's timing, and that's not always the case. But in that scenario, what I'm trying to relay is this idea that Wall Street wants to come to me and say, you got extra cash, bring it to me. Had we done that in this particular case, and many times we tell people to hold cash for various reasons, this guy would not have had the opportunity to now increase his net worth even more through a recession, through this COVID situation we're dealing with. Does that make sense?
It makes total sense. You're saying something very similar to what I like to or have espoused for years as well, that I look at. Again, the presence of money gives us a different type of confidence. Okay. And I'm a big believer in making confident decisions moving forward. So, what, I don't know if a lot of people know about me, or a lot do. I'm a baseball guy, right? So I grew up always thinking I was going to play pro ball. So did my then girlfriend, now wife. Fooled her. She got stuck with me. But I used to sit in my garage, I'd hit 250 balls lefty, 250 balls righty, but I believe in practicing with a purpose. So my vision in my head, not just go through the motions, but do something with intent, was bottom of the ninth, 2 outs, man on third. I come to the plate, right? That was my vision for every swing that I did, right? So my goal is pretty straightforward. My ultimate goal is to hit a home run, right? Walk off home run. But I don't much less care if I hit a bloop single. I just want to get the run home, win the game, right? But what's my biggest fear?
Striking out.
No one's ever missed that in 10 years of doing this, Justin, right?
Striking out.
So if I rip the ball down the left field line and get robbed of a home run, I have technically failed, correct? But I would argue I don't own failure because I'm not so arrogant to believe I can control everything. But striking out is largely controllable. If I can all but remove my risk of striking out, do you think I can swing with more confidence?
Absolutely.
If I can swing with more confidence, do you think I can improve the odds that I get the outcome I want?
Absolutely.
Okay. It applies in most of sports, right? Anyone who's ever done that, I think that's kind of an innate belief in them. Why don't we apply that to the rest of our lives too? right? I would be willing to bet that those business owners that we can help understand that presence of liquidity will help them, we're going to improve their odds of success, most importantly, because they will begin to control their business versus their business controlling them. And
But
what I mean is if you don't have any liquidity on your business balance sheet, you can't say no to a customer. You have to work with everyone because you can't afford to say no.
but you realize that what you just said is so contrary to what the media pumps through their advertisements, through what Wall Street pumps through their advertisement, and candidly, to what many advisory firms, business advisory firms, pump through their advertisement. You realize that, right?
Oh, I do. But that's why I was so excited to come here, because we're taking a different approach.
You know, I have seen my net worth double. It's
Mm-hmm.
amazing to watch. And if somebody were to look at my net, in fact, I've been challenged to put my net worth out there so people could watch it grow over time. I think it's a little bit arrogant to do that.
Mm-hmm.
Personally, I think that's a a blogger's trick. I think it's nefarious and personally, in my opinion. But if I were to look at my balance sheet right now, my number one asset is my business.
Mm-hmm.
Number one. My second largest asset is real estate.
Mm-hmm.
Not in terms of rental property. We've had dozens of properties in my career, but right now I've sold, even as of last year, hit timing just because I watch the cycles. I sold my last rental property last year, perfect time to do it, and turned around and bought farmland and timber property that now the wood pricing for timber is coming back up, that I'm going to be able to timber this land and receive credit and then have the asset to basically provide an income stream and still hold the asset. So real estate's my second position, followed by finally the stock market.
Mm-hmm.
Do you see that? I don't think I'm unusual, and I've actually written about this, and I think the studies, but in your experience, is it common to see the business being the largest asset?
That has been my experience exclusively with working with small business owners. And I think, we're just a different animal, Justin. We are, right? If I'm going into an office building somewhere and collecting, base compensation plus bonus, I'm not taking any real risk with my human capital. So therefore I must take that risk with my financial capital. My best scenario there is the stock market. But as a business owner, that's just not the case. Right? I look at it, in terms of, as a business owner, when I'm trying to give myself the confidence to make good strategic long-term decisions, not just decisions based on urgency, okay, but both not urgent and important decisions, I like to have multiple tools in my toolbox, right? My investable assets is a tool. I've got liquidity tools. I've got real estate tools. I think most business owners think this way.
I'm going to get off of this world of Wall Street because I really view them as the enemy for small business. I candidly do. That's just my belief.
They're your best friend once you've made it.
Absolutely. While you're growing wealth, the Wall Street is your enemy. But once you get the wealth, Wall Street is the safest way to diversify and give you a return. My opinion. Feel free to make yours. But here's what I look at so many times. If I'm asked, hey, what are the fees? Right? What does Wall Street typically say? Well, I was reading a chart the other day, about 1.35 is the average fee from Wall Street if you were to run the whole parameter out. People say 1%, it's 1.35% on investable assets. But if I'm looking at my net worth, and let's just assume for kicks and giggles that my business is worth $2 million. If I were going to pay 1% on that asset, I'm talking about a $20,000 fee to grow that asset, right? But why is it that I don't think as a business owner that I need to have help from people who've been down this road before, or who consult with dozens or hundreds of businesses that are just like mine? Why am I so afraid of paying a 1% or 2% fee for custom advice on my business, but I take it as the norm that I'm willing to pay 1 or 2% on my small Roth IRA? Why do we think that way as business owners?
That's a good question. I'm not sure. I have to give that some more thought. I just think, I'm just thinking out loud here. I think there's multiple types of business owners out there, right? You've got the folks who look at their business as their personal ATM. They just run all the expenses through that they can. There's nothing we can do to help them. Odds are they're going to fail, right? You got type 2, which is the type of person who basically just has a job with no boss, right? And that's not right or wrong. It's just different. But then you got those who are looking to build something that can go beyond them, build something with transferable value, right? I think maybe over time when as those business owners realize that there is that support for them, maybe they will become more receptive to a fee to help them grow their most impactful asset on their balance sheet. I don't know why they don't feel that way yet. I think maybe something has to do with the fact that there's such a negative connotation with financial advisors.
Yeah.
If we can get through that over time.
Well, so that brings me to the solution. Okay. So, one of the advantages I have in my world, in your world, is I get to see a lot of different things. I hear so much, and we're hobnobbing with some of the country's best advisors, not necessarily just financial, but tax and state and business and real estate and all these different advisors. I mean, we're rubbing shoulders with them now with the criteria and the clout that we've built through our organization. I can remember a couple of weeks ago that I refinanced my house at a 2.71% interest rate on a 30-year mortgage. Think about this, just a couple of weeks ago. It was a one-day spike, right? And my advisor to me called me and said, "Hey, brother, jump on this now." Now, had I not had my success team, my team of people all around me, I would not have known that. So I view it as a solution is bringing about a team of people. And you've coined this term called the success team. I'd like for you to kind of speak toward what that term means. And then our next episode, let's talk about who do you position on that team.
Okay. So I want to bring back something you just said that I don't think many people are aware of. You just said your advisor.
Yeah.
Okay. Your advisor.
Yeah.
I have an advisor. Why do you have an advisor? As a business owner, why do you have one?
I can't see my blind spot. So I use the analogy Michael Phelps. Okay. I admire him because I love to swim. I can't swim as fast as the guy. I'm not as tall as he is, but I love to swim. That's my therapy especially in the summertime here in East Tennessee. I always dream there's sharks underneath me. So I'm like swimming as fast as I can. So my jaws is fixing to eat me because of some incidents in my life. But Michael Phelps, he had multiple coaches that could look at his turns, his stroke, his eating habits, his weight strategies, his massage strategies, and those coaches were spot on and the best or close to the best in their industry. And because of that, he was able to do more than what he could do by himself. So in my world, I want to surround myself with advisors. I have my own financial advisor, my own business advisor, my own tax advisor, my own legal advisor, multiple legal advisors, have all these real estate advisors, custom currency, cryptocurrency, all these advisors who speak into my world, but I have one advisor who sits across the desk from me, so to speak. Whenever I have a problem, I can bounce off everybody else, but I have that one key person that ultimately what they say carries the most weight for me. So I have a series of advisors. So I call them, I love your statement, the success team.
Mm-hmm.
So am I describing a success team, or how would you describe a success team?
That's exactly how I would describe it. There's this, to me, this is not my term. I've heard it somewhere. I just don't know who to give credit to. If you want to go fast, go it alone. If you want to go far, go together.
That's actually an old African proverb is what
right?
That is. Yep.
So I truly subscribe to that. And I know that I am emotionally connected to the stuff I believe I have created. And I need people around me that I am willing to be vulnerable with and listen to, that I believe are committed to helping me accomplish my goals. Okay. And I believe that from a goal accomplishment standpoint, our most valuable currency, Justin, is our time.
Yeah.
Absolutely. Okay. So I think there's this, sort of flawed belief that, well, those of us who become successful often become successful because we're good at a great number of things, right? Give me the ball. I want it in my hand. I'll figure it out. I'll get it done faster. And that's great to achieve some success, but it will in fact prevent us from achieving our ultimate success. Okay. We have to learn to delegate, right? If I am competent at a lot of things, I'll never become an expert at anything. Right. I'm going back to Dan Sullivan's strategic coach on that. Yep. Right. I subscribe to that. Okay. So that necessitates that we need to surround ourselves with people who have an expertise or a unique ability that is valuable to what we are trying to accomplish. Okay. And it is worth us spending the time to identify those people, the members of the success team. Everybody knows we need a good CPA, right? And that doesn't just mean tax compliance. That means forward thinking, right? We need a good estate planning attorney, trust and estates attorney. We need a good business attorney, right? We need real financial professionals around us. And it's worth spending our time vetting those people, right? If you have to interview 20 apiece, I don't care. It's worth the time to do it. Even the best athletes in the world have a coach. And there's a reason for that, because we all got our blind spots.
So as we wrap this up for today, what we wanted to set out today, friends, is to kind of introduce ultimately success stories.
Hmm.
And we've interviewed a couple of business owners already who are going to be on the show. And we know, we've heard the analogy, and that is we entrepreneurs, we business owners are equipped in such a way that, as I often say, I'll charge hell with a water pistol. You tell me I can't do something, I'm going to prove you how many times I can do it, right? That's how we're geared, especially us crazy high D personalities like myself. We're just wired that way. I'll kind of sign off with this. Someone asked me this week on a national platform. The question was, Justin, what does it take to start a business? What does it take to be a small business owner? And instantly I said insanity. Instantly insanity. And the person doing the interview said, what? I said insanity, because there's no well-respected MBA who would look at what we deal with as business owners and say it makes sense. There's no one out there. So if the odds of failure are so high, then I subscribe to this position that in a multitude of counselors, there is safety. Solomon was considered to be the wisest person in the world. I mean, he would argue. He said in a multitude of counselors, there's safety. So what we wanted to bring to you as a mini-series is this idea behind success. What does it mean to different people? What it means to me, candidly, is this opposite or different than what it means to Brandon. We have two different paths of success. So we want to deal with this idea of success. And what I'm going to challenge you to as a listener on the podcast is think about that question hard. What does success mean to you? And as we go through this series, Brandon and I are going to try to validate or verify or identify how many different methods of success there is.
Yeah.
And it's not often get rich. But before somebody reaches their, quote, success level, I could almost bet you that there is this mindset before they ever launch in that, or they currently are adjusting it to where there's a group of people to whom they will give immense credit to. Perhaps it's a teacher early in life. I know the person that caused me to write my book was an English teacher who told me I couldn't spell worth a flip, and she was right. And she said I would be dumb as a box of rocks. So she was wrong about that. And because of her influence, positive or negative, I wrote a book. And I'll write another one. I'm going to write another one because of influence. So perhaps it was a teacher, perhaps it's a mom or dad, perhaps it's an advisor somewhere. What we want to do is the next few episodes to identify what is success, what our success means to business owners, what perhaps does success mean to you. And what I'm going to challenge you to do is if you have a really cool story, your business, we'd like to highlight that. We'd like for you to reach out to financiallysimple.com. You can connect with us there and say, hey, I've got a success story that I want to share and brag on my advisor, my team, my teacher, my dad, my mom. Let's give credit to whom credit is due, right? So Brandon and I want to give the opportunity. In our next episode, Brandon, we're going to talk through this success team. Mm-hmm. What can people look forward to on that next episode?
So I want to share what I'm believe we will be proving through this series is that if and when we surround ourselves with good people who are deeply committed to being good at their chosen profession, there's no limit to what we can achieve. Okay. That's what I'm seeking to prove with this. So we'll go through the different members, what in our opinion, who are the key members of the success team and what roles they can play. And, you know, I'd love to learn from what our listeners are thinking too.
Absolutely. So friends, stay tuned. This is going to be a little mini series that Brandon and I are going to try to bring you on about every 2 weeks here as we gear up and try to start handing you out some real life cases, real life people who've been there, done that. And we want to just, enjoy this entrepreneurial spirit that all of us have. And man, we're just like as a fan on the cheering for the baseball team, I want to be on the sidelines, clapping them on and fist bumping and like, man, when they rock it out, I want to noise that. So if that's you, perhaps you've had an unbelievable grand slam and you want to just, you want to share it because we business owners are lonely oftentimes. We want to give a platform to that. So look, in the meantime, life is good. Man, look at how much we have opportunity. We are blessed people, friends. We are. Life is good. Life is hard. I'm seeing some hard things right now with some people whom I love deeply. Life is hard. And candidly, life can be frustrating, but money doesn't have to be. Doesn't have to be. This business world, it doesn't be frustrating. We're going to continue to make our lives at least financially simple. Y'all stay tuned. Reach out to us with what success story that you may have through the blog, financiallysimple.com. And until then, y'all go out and make it a great day.